Rise and shine, traders. Today is officially the big day. It's a CPI report, and we're going to be sharing a lot of things with you as well. So, not only is the CPI event, it's also the FOMC meeting minutes. Now, today we're going to expect the volatile day, and it is the biggest impact and economic event day that we have this week. And many traders were definitely waiting for this one. So if you guys like this video and it provides you some sort of value, please don't forget to hit the like and subscribe button to stay tuned for more details. Now let's get into it. First thing I want to talk about some announcements in the chat room. So we have officially launched our free Discord trading service. So for anyone that's interested and looking to integrate that free service, our goal is to give around 3 to 5 trades per week and provide a non-stop commentary as well. So this will help a lot of traders as well. You may have also access to our newsletter as well, which definitely is a positive thing and can contribute to your overall trading scenario. Now, this is the free service, but our private mentorship definitely is the next step above, in which you guys get the full detail plan, the full analysis, and so forth. But this is for traders that are running small accounts and are living currently on a budget, but still want to progress their learning and be part of our StockX community. Now, currently we see the S&P 500 hovering between 4110 and 4120. The key thing about the market was that we've determined that the market will be grinding higher but selling into strength. So no matter how far you get, there will always be sellers at the key inflection gamma levels, and that will definitely drive the market in a standstill. But the premiums have got lowered, and for today we've basically only holding two positions, which is the upside and the downside. But the key thing that we did here is we added a lot of time on our upside because we do see that the market is going to be trailing towards that 4,200 key level. And we're holding the 4175 calls for Friday expiration. And for the downside, we got the 4100 puts at $9 or so. And we bought those at yesterday, near yesterday's close, which was a perfect opportunity because that was a key inflection point on the premiums. And as soon as we got in, the market started to drop, and immediately we had a trade that gave almost a double, but we're not selling those. So this is the type of analysis that we give in our private mentorship program. Now, on top of that, let's talk about the CPI report. So this CPI report in particular is very crucial for the overall market. Why? Because it has a lot to do with the future expectation in terms of how much rates are going to be rising or declining. Now, the market wants to know where the status is in terms of that, and we're basically near the end of the rate hike cycle. And in order for us to really feel assurances, the CPI report is super critical and will dictate the future trend of the market. Okay, so right now, what we're seeing, the key range for the week is 4175, although it is possible to go to 4200 on S&P 500 for this week. And on the bottom range, we're seeing the S&P 500 could go back down to 4015 is our key weekly range, and we share that in our newsletter as well. So let's see what this event holds in place. The CPI report is expected to occur at 8:30 a.m. Eastern time zone, and the expectation is that inflation year over year is at 5.2%, and the month over month increase is by 0.2%. Now, this is a major decline from last month's estimates, because the last month's estimates, CPI was expected to be 6%. So the market is expecting a drop in overall inflation. Now, let's talk about key scenarios here. So what happens if inflation comes back higher than expected? Well, that just means there's going to be more rate hikes. And right now, the market is having a hard time sustaining this high-level rate environment because we're seeing banks collapse and we're seeing financial distress happen in consumers' pockets. Right now, the job market is pretty much very strong to handle these rate hikes. But overall, the key thing is that when banks start to collapse, that's when the monetary policy needs to be adjusted in order to support depositors and avoid further bank runs. So this is one of the crucial things if inflation was to rise. Now, if inflation comes back lower than expected by a large amount, that is actually bearish as well too. Now, here's why. Now, if let's just say, for example, inflation came back at 4%, that means that we're in a very the acceleration of deflation is going at an astronomical amount. Now, at first, this may be perceived as a bullish case scenario, and you may see the markets move. But once the markets gets a idea of what this really means, the overall impact will be astronomical, because that means the Feds have to intervene quickly to reduce rates and ensure that there's financial stability, because at the end of the day, deflation is worse than inflation. And that's one thing you want to really look out for. Now, if there's a modest decline of the CPI report, let's just say CPI comes at 5%, then definitely we can see inflation, the whole report. And last thing here, guys, so one of the stocks that can definitely move off a bullish case scenario is Tesla. Possible to see Tesla break out to 192 if the inflation report comes back modestly bullish. And techs are definitely going to be in big trouble if we do see inflation rise. So the weakest stocks from yesterday are Microsoft after getting that downgrade by Azure. And we can see the cloud stocks such as Snow move lower as well. And NVIDIA and LRCX's semiconductor stocks, they also have a key risk right now. China issued a no-fly zone on Taiwan between 16th and 18th. Now, because there's a deadline with the no-fly zone, it could just mean your ordinary military drills that are occurring. But overall, it does mean that the overall situation is escalating, and it may become a problematic situation. So beware for that following date here. We want to watch the markets and see how they react, because that could definitely start to move things. The market won't move if it's just a military drill or whatnot, but if there's actually an event that occurs where an attack has been issued, then we're talking about a major down day that can happen in the overall financial markets. So that's one of the key risks that we're watching out for sometime next week. But it's also very important to keep that in your mindset, so that way you guys are aware on what stocks to really short on the news or watch out for in terms of if you're having a portfolio of semiconductor stocks, because they're at huge risk, and so is the entire market if an attack is made by China to Taiwan. So that's all I got for you guys today. I hope you guys enjoyed the call. So we'll see you guys in the chat. If you guys want to test our mentorship program, we do offer trials into our main mentorship program, and we also do offer a Discord in which you guys can enjoy. So a lot of things that we offer. Please take a look at our link tree in the bio to see the services and be involved in our community. So if you guys like this video and you find value on it, please press the like and subscribe button, so that way you guys don't miss out on the future market events.